Hello and welcome everybody to Oil Asset of the Day, presented by myself, Phil Carr at the Gold and Silver Club, and we'll be looking at oil prices for the week ahead. So first of all, what do you need to know at the moment? We had a huge month for oil prices over the month of May. In fact, WTI closed 16% down on the month, where we've seen this real acceleration in trade war tensions over the month of May, and even at the end of last week, where Donald Trump put and expressed further tariffs he was been looking to essentially put on Mexico, which have had a significant impact on oil prices. Mexico being a very key trade partner with the USA. And also we've seen that additional impact over the last week of an increase in oil inventories yet again. So oil inventory data, and that's released again on Wednesday at 3:30 London time. We've seen more recently the biggest build since 2017. And of course, more oil in the market is having an increase in supply, and that is causing the price of oil to go down. So what we've actually seen in terms of data is that the US is now producing over 12 million barrels per day of crude oil. And that's even more than Saudi Arabia and Russia now as well. And later on into May and the beginning of June, we are now going to see 6 super tankers exporting crude oil, which is a record amount of oil being exported from the USA. And we're seeing overall that have again more impact for oil prices, where you've got OPEC right now, which are trying to reduce their overall output in an effort to balance the oil market, whereas you have America, which are ramping up their overall production of oil. So you have this balance going on in the market right now, but how can you trade it? So what should you look out for? Well, essentially over the course of this week, we have had a significant decline towards the end of last week. As we discussed previously, what you want to be looking at week to week is trading very key levels on oil. So I'm looking at support this week, first of all, to be coming in around $52 per barrel for US oil, but I'm also looking for resistance around $55 per barrel. And that's quite key. So we're looking to move within approximately that 300-point range over the course of this week. Although the last couple of weeks, we have seen bigger ranges on oil as it's continued to break through major layers of support, and we've been seeing about 500 to 600 point ranges week to week. But I would look at key support for US oil, certainly around $50 per barrel. At the moment, I'm looking at that $52 per barrel handle as potentially seeing some buyers come in, but I'd say 52 down to 50 because we are seeing quite large price moves at the moment on oil. You definitely want to look out for API data on Tuesday, and you've also got 3:30 p.m. on Wednesday. That will be the crude oil inventory data as well. Hedge funds and money managers, they've reduced their net long positions on crude oil in the latest week. That will help you a lot to keep on the right side of the oil market. I mentioned previously before as well, something really simplistic for you to keep on your charts would be, for example, Keltner channels, where we've broken through the midpoint of the Keltner channel approximately mid-May, and then oil turned into a sell short opportunity rather than buying on pullbacks. That's really been very helpful indeed to be on the right side of these moves here with crude oil. So I'm looking basically at resistance and potentially sellers to come in around 55, support around 52, trading that range. If we break through 52, I'd look at that very key psychological number of $50 per barrel. The markets have a way of magnetizing to very key round numbers. So often you will see the price continue to break until it does find support. For example, on oil, $55 per barrel, if it was to retrace, then find resistance. And then if it broke through 52, I'd look at $50 per barrel for support to come in at that level. Now, later in the month, as we get towards the end of June, and then as we go into July, we've then got the OPEC meeting, and everybody also wants to see whether OPEC are going to continue to cut supply to the market. And obviously, if they do that, that would have a potentially a positive impact on oil prices. Also, as we continue throughout the month of June, usually during this time of year, as we start to move into the holiday season, you do see fuel consumption go up due to some of the summer holiday driving. And that can also have a positive impact on oil prices. If we do start to rebound from $50 to $52 per barrel with WTI crude oil, and we have a meaningful move to the upside, it could actually provide a really good buy opportunity, certainly later on this month as well, if that is timed with OPEC also continuing to expand the overall time horizon for how long they're going to continue to reduce their supply to the market. That could provide further support to the oil market. You want to be trading the range, but normally the month of June does tend to be a supportive month for crude oil. That said, we've got the OPEC meeting at the end of the month, so you definitely just want to keep an eye out for news feeds, key fundamental data. Obviously, if we see any escalation in trade war tensions between the US and other countries, Mexico being the latest, that can also have a negative impact on oil prices. Just note as well that we've seen over the last 3 or 4 weeks here, over the month of May, over 2 trillion has come out of global equity markets as a result of this escalation in trade war tensions. It's also quite unusual at the moment to see gold breaking out and surging the way it is, getting the safe haven bid, which isn't unusual, but it's unusual to see gold go up and oil go down. There's a disparity at the moment. So normally it's the case when you are seeing commodities like gold, platinum, silver break out, as they are doing at the moment, oil would get some degree of a bid as well, because the US dollar index has broken down significantly back to the 97 levels. So with that in mind, watch out for potential capitulations here on oil. I'm not a big fan of selling oil at support, which right now is around 52 to 50. I'd say more so look at rallies to sell into. So for example, if oil rallied back to 55 US dollars per barrel, then we could look at potential sell shorts around that level. If you sell at the bottom, you then risk a potential capitulation move, and you can get stuck very quickly in a 100, 200, 300 point move in the wrong direction there. So better to sell into rallies, in my opinion, with oil at the moment, and look to buy at very key psychological levels. Those magnetized zones, 50 US dollars per barrel now on WTI crude oil, is that major layer of support. So later in the week, we also have non-farm payroll data too. So keep an eye on that. There's going to be some great trade opportunities this week on oil and gold. We've covered gold in detail on Gold Asset of the Day. So this week, look out for oil on Tuesday, the API data. Wednesday, the crude oil inventory data as well you want to look out for. You've got Thursday, European Central Bank announcement. Friday, we have non-farm payroll data as well. Be aware that hedge funds and money managers, they've cut their overall net long positions in oil again in the latest week. Be aware that also we're seeing an increase in overall production from the USA, so look out for crude oil inventory data on that as well. And then later on in the week, we really just want to have a look at that Baker Hughes oil rig count as well to see if we have seen an increase or a decrease in the amount of oil rigs as well. So with that, just keep on top of it, keep on top of the fundamentals. That will help you a lot with getting the right sort of trade with oil. Just bear in mind as well that Donald Trump is in the UK at the moment, so we might not see the usual sort of explosive tweets that we normally see over the course of this week, but I would just keep an eye out for any major updates in the oil market. It's the best way to trade it. Fundamental, news-driven trading is what is key. Understanding the seasonals, the fundamentals, and also just being on top of all these data points, oil inventories, hedge funds and money managers, and seasonality. That will all help you trade oil much, much better and more profitably. So with that, that has been Oil Asset of the Day. I wish you good trading.